$46 trillion in financial wealth has already been lost during the great global market crash of 2022. This is by Michael Snyder on Economic Collapse blog. In less than 1 year, $46 trillion in financial wealth has been wiped out. If that isn't a crash, how would you define one? Since last November, stocks and bonds have been plunging all over the globe. When there is a good day like we saw on Monday, sometimes that can fool us into thinking that everything is going to be okay. But in order to understand what is really going on, we need to step back and look at the bigger picture. And when we look at the bigger picture, it becomes exceedingly clear that we are in the midst of a historic worldwide market crash. According to Bank of America, a whopping $46.1 trillion in financial wealth has already been wiped out since last November. They report it's been a tough year for investors, with global stock and bond markets erasing $46.1 trillion in market value since November 2021, according to Bank of America. The massive drawdown has led to forced liquidations on Wall Street. The bank's chief investment strategist Michael Hartnett said in a Friday note, highlighting the recent break below 2018 support in the New York Stock Exchange Composite Index. When I first came across that number, I could hardly believe it, but it's accurate. Stocks have been falling and falling and falling, and the Bank of America is warning that this is one of the worst global bond market crashes that we have ever seen. Analysts at Bank of America liken it to going cold turkey and blame it for causing the third great bond bear market. They calculate a 20% plus losses suffered by government debt investors over the last year are now at par with the post-World War I and II years of 1920 and 1949 and the Great Depression rout of 1931. The combined collapse in global stock and bond markets means global market capitalization has been slashed by over $46 trillion. That is an amount of money that is difficult to comprehend. The total value of all goods and services produced in the United States last year was approximately $23 trillion. So we're talking about an amount of money that's roughly twice as large as our GDP for an entire year. When the Federal Reserve and other central banks around the world took the punch bowl away, it was obvious that something like this would happen. Central bank intervention pushed global financial markets to absolutely absurd levels, and there was no way that they could remain there once the artificial support was removed. Here in the United States, all of the major stock indexes have fallen for 3 quarters in a row, and tech stocks have been leading the way down. The S&P 500 index closed Friday at 3,586, down 25.6% from its intraday high January 3rd, and where it had first been in November 2020. The Russell 2000, which tracks small cap stocks, is down 31.8% from its high on November 5th, having thereby maintained its function as an early warning signal. The Nasdaq closed at 10,576, down 34.8% from its intraday high November 22nd, and the very day Microsoft CEO Satya Nadella dumped 50.2% of his Microsoft stock in a bunch of frenzied trades totaling $285 million. On the list of best-timed insider trades ever, he must be at the very top. Since then, Microsoft shares have plunged 33.4% to $232.90, the lowest closing price since March 2021. As I discussed a few days ago, the wealthiest tech tycoons have collectively lost $315 billion over the past year, so they must be hurting. The Federal Reserve giveth and the Federal Reserve taketh away. The same thing is true for the housing market. Fed policies created the largest housing bubble in our history, but now that bubble is bursting. In fact, it's been reported that we just witnessed the largest single-month price decline since the last financial crisis. Today, Black Knight confirmed that the U.S. housing market has turned decidedly ugly, with the two biggest monthly declines since the global financial crisis. According to a Monday report from mortgage data provider, median home prices fell 0.98% in August from a month earlier, following a 1.05% drop in July. The two periods mark the largest monthly decline since January 2009. In fact, at the current pace of declines, we may soon see a record drop in home prices, surpassing the largest historical slide hit during the global financial crisis. The report noted that July and August 2022 marked the largest single-month price decline since January 2009 and rank among the eight largest on record. If the Federal Reserve does not reduce rates, things will soon get really ugly for the housing market. Unfortunately, the Fed is actually going to keep raising the rates because Fed officials are scared to death of the raging inflation crisis that they originally helped to create. Thanks to the Fed, grocery prices were up 13.5% in August. We've seen the highest prices at the grocery store, and it looks like they won't be coming down anytime soon. New government data shows grocery prices climbed 13.5% in August from the year before. That's the highest annual increase since March 1979. Food producers say the surge is a result of paying higher prices for labor and packaging materials. They also point to extreme weather, disease, and supply issues. As long as we keep seeing numbers like that, the Fed is going to keep rising rates. And the price of gasoline just hit another all-time high record in Los Angeles. Gas prices hit a record high in Los Angeles County for $6.466 per gallon on Monday morning, soaring past the previous record set during the nationwide price surge this past spring. So if you think that's bad, just wait until California residents are paying $10 a gallon for gasoline. The cost of living has become incredibly oppressive, and one recent survey found that 73% of Americans believe that their incomes are falling behind inflation. Scott Rasmussen's number of the day survey results on Ballotpedia also found that 73% of Americans say that over the past year, their income has been falling behind inflation. The survey's sample size was 1,200 registered voters, and it was conducted online by pollster Scott Rasmussen, September 15 to 17. The margin of error for the full sample is plus or minus 2.8 percentage points. Until inflation is under control, the Fed is going to keep raising rates. And inflation is not likely to be under control anytime soon because the vast majority of U.S. manufacturers are planning more price increases in 2023. In a new Foxometry John Zogby strategy survey shared with Secrets about the impact of inflation and the continued supply chain crisis under President Biden, 87% of manufacturing CEOs said they plan to increase prices in 2023. Many cited the ongoing supply chain crisis, problems getting materials from China, and sellers taking advantage of the economic mess to jack up prices. Our margins are under pressure as costs keep up throughout the supply chain network, one CEO told the poll conducted by Jeremy Zogby, the managing partner of John Zogby Strategies. So the Federal Reserve will not be riding to the rescue of the financial markets this time around. Federal officials are absolutely petrified of high inflation, and so rates will continue to go up. And that means that this financial bubble will continue to implode. As Eric Peters has aptly noted, market crashes can take a long time to fully play out. Quote, "It's important to remember that the bursting of a bubble takes a long time to play out. It may feel fast and chaotic at various points in the process, but it is not really. A look at 2008. Everyone thinks of Lehman bankruptcy on September 18, 2008 as the big catalyst for that crisis, but the S&P 500 had peaked that previous November. Bear Stearns failed March 13, 2008, from the Friday before Lehman bankruptcy to the end of that month. The S&P was only down 7%. The real weakness was in October with a local low in November. The final bottom was not until March of that year. The bubble was bursting before Lehman Brothers. That was just a large cathartic event that caught our attention, igniting our imagination. And even after that, it took months for the market to bottom. Markets don't clear imbalances instantaneously, so we should be preparing ourselves for a marathon and not a sprint. We're still only in the very early chapters of the story. As I've been relentlessly warning my readers, things are going to eventually get really, really bad. The Federal Reserve and other central banks flooded the global financial system with money, and so now we're facing a horrific worldwide inflation crisis. They are attempting to fix things by rapidly raising rates, but that's causing absolutely enormous problems for global financial markets. This is not going to end well, and we have finally gotten to a point where this should be exceedingly obvious to everyone. This is by Michael Schneider. He says, my name is Michael, and my brand new book entitled 7-Year Apocalypse is now on Amazon. In addition to my new book, I have written 5 other books that are available on Amazon, including Lost Prophecies of the Future of America, The Beginning of the End, Get Prepared Now, and Living a Life That Really Matters. When you purchase any of these books, you help to support the work that I'm doing. And one way that you can really help is by sending digital copies as gifts through Amazon to family and friends. Time is short, and I need help getting these warnings into the hands of as many people as possible. I've published thousands of articles on the Economic Collapse blog, End of the American Dream, and The Most Important News, and the articles that I publish on those sites are republished on dozens of other prominent websites all over the globe. I always freely and happily allow others to republish my articles on their own websites, but I also ask that they include this about the author section with each article, and that's what I'm doing here now. And going back to the article, the material contained in this article is for general information purposes only, and readers should consult licensed professionals before making any legal, business, financial, or health decisions. I encourage you to follow me on social media on Facebook and Twitter, and any way you can share these articles with others is a great help. These are such troubling times and people need hope. John 3:16 tells us about the hope that God has given us through Jesus Christ. Quote, for God so loved the world that he gave his only begotten Son, that whoever believeth in him should not perish, but have everlasting life. End quote. If you have not already done so, I strongly urge that you ask Jesus to be your Lord and Savior today. I'll leave a link below for you for this on the Economic Collapse blog by Michael Schneider. Please leave your comments and thank you for your support. Kindly support my Patreon account. The daily posts are 5 videos daily, and they are totally different from what I have on my YouTube channel. Thank you so much for your support and that you find all my content so interesting. You'll find the Patreon account details in the description box below.